Right now, this is the QuickBooks interface, right? So first thing, this is a new account. So what we do now is to do some basic setup on how the transaction will work out. So basically, we want to see how to set up the VAT because the current tax reform in Nigeria make a provision that you counterbalance the input VAT and output VAT. So the input VAT are those 7.5% amount you are charged when you make purchase, right? Yes. For instance, you purchase an item of 10,000 naira. So the VAT that you'll be probably charged by the vendor will be 7.5% of 10,000 is 750 exactly. So you are going to pay 10,750
to the vendor.
to the vendor, right? That is the cost of the item plus the VAT. So the VAT charged belongs to the NRS, that's Nigeria Revenue Service. So the one you collected from the sales you make, you counterbalance. So at the end of the period or at the end of the month, so you are able to know what is due to the tax authority, right? So because the system that we're about to set up will automatically minus the one you paid from the one you received, right? Because the tax reform currently make provision that the amount of VAT you will remit is the one you collected minus the one you paid while you make purchases. So we go into the setup. So first of all, we switch into the tax because it is peculiar to us. Yes, because previously we only collect output VAT, then remit it. Then the input is assumed as expenses. So, but this one makes sense, makes some level of sense because it has a way that it reduces your VAT liability. So you are not going to pay everything you collected from your customers because you are expected to minus the VAT you've paid while you make purchases. So let's set up the VAT. So you click on next right up here. Then so let's have it that we are starting January. Then our filing is monthly. So we are under accrual basis. So we recognize expenditure as they occur. Exactly. So now let's save this. So we activate the amount that you are remitting to them. So you personally know your TIN and whichever information you want to input. So and you are ready to tax, okay? So now we're going to set up for the custom task. So we already, okay, customize invoice, not necessary. All right, now we select on the overview once again. So we're going to make a custom setup right away. So we already have our VAT set up right here. So let's have our custom VAT by adding up another task. Okay, custom setup right here. So let's name it VAT. Okay, let's use VAT 7.5, right? Okay, let's add up NRS. Exactly. So the description, let's just have it as VAT. Let's have NRS VAT. So let's go down VAT. Let's have NRS, Nigeria Revenue Service. So we don't have available TIN, right? So the start period for our VAT collection, let's have it January. Then let's choose frequency, monthly, definitely. Then reporting method, accrual, right? So this whole side makes a whole lot of sense because this is where the setup will play out to what we want to have at the end of the period. That is knowing how much is due to the tax authority. All right, so we're going to pick the tax collected, right? So the VAT collected on
7.5.
sales is 7.5. 7.5. Right. So the VAT is double-faced, the input and
Output.
the output. So for the sales, which is input,
For the
is
sales.
7.5. Then the output
Purchase.
is as well 7.5. All right. So now let's save up. So purchase is reclaimable. So now let's save the setup. Alright, so we have it right up here. So now let's select our custom tax because it's necessary so that the system gets recognized. Okay, this is it. Edit VAT 7.5 NRS. This is the custom tax we just configured. So right now let's move to the next. We move in here at the gear icon. So select the gear icon. So by the way, we've gotten our tax, VAT tax set up according to the current reform done. So now we're going to set up an account that will be monitoring the balances. So we go to chart of accounts. So we have a special account that we monitor the amount that we owe, because this account will be seeing what the input and the output in the balance as well. So now let's create new. We select new up here. All right, so let's name it NRS VAT control. Right, so this is it. So the type of account basically is a liability, right? Because it's an amount we owe to the tax authority. So we select current liability. Exactly. So let's see the default tax code. The default tax code is what we've just configured. So we have various tax code here, but we are selecting the one that is applicable to Nigeria currently, which is the one we made set up on. So this is VAT 7.5. This is what we named it. So we select it. Then let's move down.
This is paid balance.
So on paid balance, we don't have no balance because we have not had any transaction yet. So let's go down. I think we're done with the setup for the chart of accounts that we monitor the balances of the VAT collected and the VAT paid. So let's get practical about the setup and see how the VAT will work out in the background. So now let's see the current balance we have. So we go to chart of accounts by clicking the gear icon. So we select chart of accounts, then let's select the VAT, our control account, VAT control. Okay, the account is right up here. So we have 00 balance. Why? Because no transaction has occurred yet. So that's about that. Now let's get to the home page and make transaction and see what happens. So we click on the create icon. So we go to bills. So let's see what we have right up here. So let's create product first because this is a new account, no product yet. So now let's go right up here. Let's assume that we are into electronics. Let's select. Okay, this is a place we can add up our inventory, the product we sell, right? So now let's put up blender, electric blender. So this is one of the products we offer, blender. Then what kind of item? Basically it's not service, it's an inventory.
So almost like an engineering. Okay, you
If
just
it's in services, you put service. Inventory means tangible
you're
item.
buying and you're selling.
Yes, tangible item. We can also be having services, but I just choose inventory. So we select our inventory, then category, that is optional. The initial quantity we have
At
0.
hand.
Yes, we have nothing.
Okay, so now if there is already existing
So
quantity,
yes,
just
you add it, depending, because most business or some businesses
have been.
have been in existence before they bring in the accounting software. All right. So the other point, let's
Is
have
it day as of date? Anyway, that's
whichever date you want to. Yes.
maybe like
This is
under goose.
this
have-
is this is what you have as
Today.
at today.
Okay.
So
If there is any good that is coming in tomorrow, where will we now go and add it?
you add it, you first of all create the queues. You must identify that you sell this by creating the item or the inventory, so that when you want to add up, you just go to purchase and select it. You don't need to type this in anymore. So you see it while we go through there. So this is it. So let's assume that our other point is 3, meaning that when our goods is remaining just 3,
Okay,
it will tell us that okay, you have to renew.
Which one is inventory asset?
Inventory assets. Yes, the account. The account, that's the asset account of inventory. You know, inventory is an asset. So this is how it's going to appear in the balance sheet.
I have to go do drop down.
Drop down are names of account. If you want to give it a different name, for instance, you want to name it electronic inventory. Right, this is how it's going to appear in the asset, which is balance sheet. Basically, your inventory are your asset. So let's select it, move.
Sales.
So let's select the sales price. So let's have it that will sell at 50,000. 50,000. So price and VAT, price is inclusive, no. In tax, no, we don't want to include it. So our VAT will be separate from the amount. So if you click this, it implies that this 50,000 covers both the VAT. But we don't want to include it, so we don't want to have it separate. So the product, success of product, this is how it's going to appear in the income statement. That's when you sell it.
Description.
It's not necessary. You can have it inventory sales.
Sales tax.
Yes. No, we are setting up goods, not tax. We have stated.
No, I'm just trying to.
Yes. Okay, sales tax. So the kind of tax that will be applicable to this, the one we may set up on. Yes. So this aspect is the expense aspect. When you make purchase on it, so the purchase cost, let's have we purchase it 35,000.
Inclusive of?
No, not inclusive. So the 35,000 is different from the VAT. The 35,000 not inclusive of tax means that the seller says it's 35,000 plus 7.5%.
Making it 35,000.
No,
Okay.
It's when you have it inclusive.
Okay.
It means both the 7 point, that everything is in there. No, but it's better, it shouldn't be inclusive. So that we know that the amount this item is sold is 35,000.
Exclusive of the VAT.
Exclusive of the VAT. So the account that it appears on income statement is cost of sales. So the tax, the kind of VAT that will be applicable to it is this one we set up in line with the current tax reform. So now let's save and close. So we don't creating our inventory. So we save and close. Alright, so we have a blender saved. So right up here, let's purchase. Let's make purchase. So as you can see, it has already automated it, right? So you remember the cost of the blender, we made it at the rate of 35,000 per blender. So right up here, you can see the tax that we set. You can see the tax and the VAT we made at 7.5. So now let's see about it. So the cost of the item is 35,000 right here. Then the amount of the VAT, that is 7.5% of this, is 2,625. But if we had made it inclusive, it will just calculate everything to be 35,000, right? So we just want the separate amount of the item different. So that is it. So plugging them together plus VAT we pay to the vendor, right? Plus the cost of the item is 37,000. So if we are, let's assume that we want to buy more items, let's buy up to 5, right? So you can see the 5 pieces or 5 amount of the quantity of the blender is how much.
Okay, so now this is the page where you can now put the quantity.
It's already set up. The rate is up here.
Because
the
you have
yes,
the rate.
I have made the setup.
But you cannot change the rate here.
No, unless you want to change. You can change it. You can change it later. You can change it. That is if you need to change it. But it's we already made it like a normal constant.
What if there's an increment?
You can change it
here
and there.
Okay.
So setting it up there means that if you just select it, it will appear automatic. But here you have to do it. All right. So now let's see. Let's select the name of our vendor as supplier. So let's add our supplier. So our supplier is James. So this is a credit purchase. So there's need to have a supplier saved. So everything is ready right up here. So let's save. Save that right here. So now let's return and see what has happened in the background. So now let's go to our chart of account and see what balance we have in our VAT control account. So we select chart of account and our VAT search is up here. So this is the VAT. Now let's refresh. Okay, you can see right up here. So we're having 13,125. This is the amount of VAT we have paid. We have paid, right? This is minus we have paid. So due to or in line with the current tax reform, which involves the input and output VAT. So we are going to deduct this amount from the VAT we have collected from sales. At this point, it means that the tax authority are owing us 13,125 naira because this is the VAT we have paid as a result of purchase. Or in other words, this is an input VAT. Right? So the policy is that the VAT you remit at the end of the month to the tax authority is the one you collected minus the one you paid. So we have not collected anyone, we paid. So we are not going to pay them anything now, rather we have pending balance with them. Right? So when we make sale and accumulate VAT, then we deduct this one that we have paid. So now let's make a sale. Let's go to home page and make a sale so that we see how the output VAT transpires. Okay, we select right up here. We go to our customers. Let's make a sales receipt. That's a cash sales. You go right up here. So this is the interface for sales. So right here, so let's select the account that the money will be going into. So now let's have it's going into our cash account. Exactly. So what next? Let's go down and select the product we are about to sell. So this is today, we are selling it today. Select the service date. This is 7th. Then the product, definitely the blender, electric blender. All right, the amount is up here, 50,000. the amount we set up for our selling price. So let's assume we are selling all of it, the 5 pieces amount, right? All right, so the 5 pieces, the quantity sums 250,000, right? That is the selling price minus VAT. So now let's see that. Let's go down and see the more. So the 7.5 amount of the price of 250,000 is 18,750. So this is the output VAT, the one we are collecting from customers. Do you get it? So we add it up to the amount of the product we sell, that's the blender. So you'll be having 268,000, right? So now let's save the transaction and see the amount that is due for us to pay. So now we save and close the chart of accounts proper so that we can see the balance we have in our control account of the VAT. Okay, it's right up here, VAT 7.5 NRS, all right. So their balance is 5,625. So the system has automatically deducted, deducted the one we paid from the one we collected. So let's see the schedule, the history schedule. So you can see right up here. So this is the one we paid initially, 13,125 while we made purchase. Then the subsequent one, the 18,000 we collected. So now what is due to the tax authority is this amount. How do we get it? When you deduct the one you pay from the one you collected, so you have it. So this whole setup makes sense because it's easier. You don't have to go through and fro making calculation after each transaction to know how much that is required or that is due to the tax authority. So that's about that. So this is peculiar to the Nigerian businesses. So it makes sense because it has a way it reduces your tax liability. Because previously, all the input VAT, the ones you pay on, is just forfeited because they are assumed as expenses. All right, so that's about that.